We've got to be able to deliver true organic data integration, and we have to be able to understand how do we cross-sell.
Today, my guest and good friend is Bob Hilb, the CEO of the Choice Financial Group. Bob, how are you today, buddy?
Al, I'm great, buddy. Great to see you. Really excited about this conversation.
Oh, same here, and I'm really glad that we're doing it.
Me too.
So Bob, you come from a rich history of insurance brokerage.
Yes.
dating back to your dad, okay, who built one of the most prolific publicly traded brokers in the country, in HRH, that obviously was sold to Willis back in 2008. Did your own thing here for a while, and now have been leading the charge with Choice, which has been a great run. But you and I go back, and we have a terrific history, which is what I really want to talk about today.
Sure.
To start at least, but also like to get in a little bit about what you're doing now with Choice.
Sure.
What you see in the marketplace and what you see for Choice in the future. I think people will want to hear that. But Bob and I, we go way back. For those who are out there, and it's been a great run. We've had a huge amount of success together, and this is one that I'm very excited to do.
Well, thanks, Al. We really have. And, thanks for mentioning my dad. He was a great, great guy. I tell people all the time that I was born on third base, but I did not hit a triple. I was really fortunate to come into an insurance family. And you've heard this story. I won't bore you with the whole thing, but I'm the fourth of four kids, the only son, born on Father's Day. So my dad and I had a really, really close relationship. And I did not want to go to work for him right out of college. And so I got a job in London and then Chicago. And then I went to work for him, and I had a front row seat. I joined HRH when it was $30 million, and I left it when it was $4 million. And that was a 13-year period of time. And I learned a ton about how he did deals, how he built a company. And I became a pretty decent producer along the way. So it was a really good experience, but glad to be with you today. Excited about it. Just a lot of great stuff going on in our business right now.
Staying on your dad for a minute, he was a great man. He was a great man, first of all, Bob.
Yeah.
Should be very proud of him. I think he directed you in the right way and, got you into opportunities to find your own way, which, you got a great story to tell. And, I'd love for the people to hear that story because, obviously it was, weren't born into the insurance business. You found your way there. You were on your way to be a fax
machine salesman,
but
it was Xerox.
Your dad derailed that, and got you out to London, which, going to London is like going right into the big leagues back then, right off the bat. So you really learned insurance, which I think is one of the things that does differentiate you from some of the other growth strategies out there, which I know you're proud of. Then the Hilb Group was started. So I'm sure the people would love to hear a little bit more detail of your background, your story, the Hilb Group right up till how we got together with Choice.
Yeah, sure. Well, first of all, I'm delighted. So as I said, I'm a Midwestern guy, fourth of four kids, always had this dad. I have these great memories of being a little kid and taking the train with my dad on Saturdays to his insurance broker, which was called Hilb Downing. This is in the 60s. And I remember looking out the window and seeing this big hole in the ground, which is what I called Sears Tower. Today it's called Willis Tower. And so I was always exposed to it as a young man. So I went through college and I'm getting out of college, and my dad had sold his agency to Fred S. James in 1971, I think, which became Marsh, and he was a regional leader. And then when I was a sophomore in high school, 1979, my father took a job in Richmond, Virginia, which is where I live now and I love. But in 1979, it was Mars to me. It was, no pro sports teams. I didn't know anything about it. And so I went down there with my mom and dad over spring break, and God bless my dad at the very last second. He took the job and decided he was going to commute for 2 years. So I stayed in Chicago with my buddies, and my dad got this opportunity to do a leverage buyout of the company he worked for, which became HRH. So I'm coming out of school, as you mentioned a minute ago, and I did not want to go right to work for Dad. I just didn't think that made sense. So I took a job with Xerox selling fax machines. And Mom and Dad come out to graduation, and they're like, man, we're really proud of you. Great job, da-da-da-da. And I had like 3 months before my job started. And my dad's like, hey, do you want to go to London? And I thought he was sending me going to give me a Euro pass. And I'm like, yeah, hell, of course I do, Dad. And he goes, great, your job starts a week from Monday. And which was his way of getting me in the business. And so moved over there and really have never looked back. Loved the Lloyd's market. This is before it was corporatized, before there was email. So you had to literally walk in and see the underwriters face to face. And I learned really quickly that if I BS'd them, I couldn't go back and see them the next day. So I learned a lot about credibility. I learned a lot about relationships. So I did that for 6 months. Literally, some of my best business buddies came out of that experience. Came back to Chicago, worked as a wholesale broker, and then I went to work for HRH as a producer down here in Richmond. And I stunk. I tell people this all the time. I was terrible for the first 6 months. I hated Monday morning sales meetings. I didn't know anyone. I had $200 in revenue, and that was my mom and dad's personal lines account. And then I got very, very fortunate that the fellow that was my boss, a wonderful guy named Steve Deal, who ended up at Assured Partners before he retired. Steve put me in a CNA meeting, and they were talking about their CAM programs. They had all these leads. I'm like, well, heck, I'll do it. And as I tell people, you all know the rest of the story, right? I started getting some confidence writing business. And 13 years later, I had a pretty big book of business, some large law firms. And Dad had retired. It's now 2000. Company's public. And I kind of really wanted to do my own thing. I was 36, 37. My wife and I had 2 kids. We now have 3. And I just wanted to be my own dude. And so I went to HRH and I said, hey, I want to go work for ABC Broker. Will you sell my book? And they were like, no, we're not going to do that. And so they gave me a really good deal. But I had to live out my non-compete. And so I was doing that. 9/11 happened. Started thinking, what am I going to do? I thought, I want to put my money where my mouth is. And I've got a period of years that I can't be in the industry. So I bought a cutting tool supply business, and then a machine tool dealer. And I loved that experience, loved and hated it, because I was it was my money. I was trying to figure out how to grow the business. And I tell sellers when I'm talking to them all the time that I'm a unique entity. I've not been a big corporate guy. I've been a producer. I've been a business owner. And that impacts everything we do at Choice today. Because I tell folks all the time, this is not a difficult business. People make this business way too complex. This is literally, how can we as a partner help you sell more insurance? That was kind of my vision in owning those businesses. They were great until the downturn in 2009 came. And then I sold one, closed the other. And at the same time, HRH had sold to Willis. And so I saw a great opportunity. That's when you and I first met. I had this idea of going around and finding private equity folks to fund this new venture that my partners told me to call the Hilb Group. So I had these 3 other guys, and we put up, a bunch of our own money. And I was going around talking to folks, and I can't remember if I found you, Al, or you found me, but we connected in 2009, and because you knew the HRH folks pretty well, and you were phenomenal. And I tell people this all the time, Al, without you, there would never have been a Hilb Group, and I certainly wouldn't be doing what I'm doing right now. So I've got a lot of affection for you, brother. And so you showed me a ton of deals back in those days, and you coached me. You said, hey, these are the things that these guys want to learn. And so I went around in 2009 and 10 with maybe a couple $1 million pledged from myself and the other founders. I think we went 0 for 24 in our first 24 LOIs. And then on the 25th deal, which, as you know, was your partner, Mike Fletcher, was the banker on when he worked for somebody else. We got the signed LOI, and we had to raise $3.5 million really quickly, which we did from 14 outside investors. And that's the story of birthing the Hilb Group. And from there, the next 7 years, we grew it, from, I guess that was probably 2010. Yeah, next 7 years, we grew it to about 150 million, 2 PE firms. I tell people a lot, I have been so blessed to work with 3 really terrific private equity firms. BHMS, Kevin Angelis, we were his second portfolio company. I didn't know anything about PE. He didn't know anything about insurance. And we really taught each other a lot. And I'm still really, really pleased that he and I have a great relationship. Then we went to Abry Partners. You engineered that. We had a great experience there. I'm still, I do a deal with Nate Ott tomorrow. He's a great, great guy. And then, for a whole variety of reasons, in 2017, Hilb Group and I separated, and I sat out a non-compete. And then in 2019, I started consulting, and got 4 clients really quickly, one of which was a $2 million revenue nationwide agency in Virginia Beach called Choice. Great entrepreneur, Richard Braun. He and I kind of worked together, and I helped him. He was full speed ahead. And over the next 2 years, we grew the business to, I think, 14 million and about 5 of EBITDA. Rich did 98% of the work. And then he wanted to know who to hire as an investment banker. And I gave him 3 names, yours among them. And he kept calling me and saying, which one would you pick? And I'm like, well, you make your own decision. And you love this. He called me back and he goes, that guy Al, he's a little rough, man. He's going to get me the best deal. I'm like, you are correct. And so you took us to the market, and you took Rich to the market. I was on a bunch of the private equity calls, and he sold the business to Northlane Capital Partners about 4 years ago in November. And, my intention, Al, at that time was to go back to being a consultant. I was loving being a consultant. Hilb had sold in 2019, and I'd taken my off the table and was really, really happy. And then I got a call from a lovely guy at NCP, Northlane, called Sean Eagle, and who was one of the main partners there. And he was extremely persuasive and convinced me to, walk away from my consulting practice and become a board member and an advisor. And as I said to Sean and his team, they're great, great guys. They've been wonderful partners. And about 6 months later, I think we made the collective decision that I had some experiences that would be helpful to the company. And I became the CEO, and Rich is on our board today and still a major shareholder. And so it's been a lot of fun. I guess I've done about 100 deals in the industry when you can take Hilb and Choice. And, we're pushing up against 80 million in revenue right now. We're one of the few PE-backed brokers that hasn't had a liquidity event yet. We're, excited and hopeful to see where that goes. But we look for a couple of really simple things. We look for folks that want to end their career with us. That's really important. We look for folks where 1 + 1 can make 3 or 4, where we can help them grow their business. And of course, folks that want to take 25% of their deal in stock. You and I both know, Al, that there's been a lot of success stories, and there's been a couple of cautionary tales. And so we're really passionate around explaining to our partners that, I've been there, I've done it. This is my 3rd private equity partner. I don't know how many folks have had 3 different PE partners in their career in our industry, and each one has taught me something. And so I tell folks that, look, this is the way you're going to build generational wealth. You only sell your business one time. And so that's really important. And so we're having a great time. As you know, we've, $80 million in revenue. I think we've done 35 deals. We've got 2 or 3 more that we're going to close here pretty soon. We'll probably end the year bumping up against 100 million. Northlane's a phenomenal partner. We'll see what happens in the future, but we're pretty excited about where we're going. You asked about the market. I think one thing that's really fascinating is, and you know this, you and I talk about this all the time, is the change in the market in the last 10 years. 10, 12 years ago, you could just be PE backed. You could roll up a bunch of revenue and you'd flip to a different PE firm. You didn't really have to integrate. You didn't really have to drive organic. It was just the way it was. There's been an enormous shift in the last 2 or 3 years in our industry. And you really have to build what I call a forever company. You've got to make investments. You got to do a lot of things that bring value to your partners. And one of the biggest kudos I can give the guys at Northlane is, I guess about 18 months ago, I went up there and had a day-long session with them. And they said, okay, what do we need to build a great company? And I said, well, fellas, you got to do a couple of things. You got to technology, growth, operations. You got to get the right players in the right seats. And to their credit, they basically said, go spend a bunch of money, hire the right people. And we have. And that's been a big game changer for us. So we now engage in what I call kind of a moderate to almost a strong integration strategy. We come in the first 30 days and we lift all the, HR, accounting, all that stuff that the sellers don't want to deal with, licensing, carriers. We take all that off their shoulders. Then we begin a process of transitioning them onto one Epic platform, because we think data is power. And then we got a great growth team that comes in and talks about cross-selling and specialties. I talked to a guy today that's 99% commercial lines, never sold employee benefits in his life. And I'm like, well, that's one of the things that we can really bring to you is, 65% P&C, 35% EB. So it's those types of things where the seller can take a step back and say, gosh, my life's going to be better with these guys. They're going to help me, grow at over 10% clip a year. They're going to help me make a big investment in my stock and, get that into a positive thing. And, I'm going to have fun along the way. To us, that's what it's all about. So long-winded, apologize for talking so much, but it's been a really interesting shift.
Yeah, no, listen, I think you got a great story to tell, and I know you're passionate about it. A couple comments, yes, I wasn't sure either who connected with who. I happen to think you might have connected with me.
I think so.
Okay. And immediately we hit it off, and immediately it was something where, interestingly, the timing of it all is, that was probably, like I said, 2009, 2010, before Mike and I joined forces, which was, really 2013, even though we formally incorporated everything in 2014. So it was kind of interesting, how it all unfolded, because a lot of things that I've done have all kind of stemmed around that last 12 years ago, 13 years ago, when a lot of this stuff unfolded. And it was interesting to see. And I think probably some of the things that I advised you on were, Bob, you need private equity money. I think the thing that resonates with me most is the friendship and the relationship that we've built, consistently sticking through all the good, the bad, the indifferent, and then coming out again with Richard's a great guy. And I think, the move that was made obviously was because of your experience. And of course, the process we ran with the private equities to come up with Northlane has spearheaded this opportunity here with Choice, which obviously became one of our more recent investments, because when we bring the money in, that's when we invest, and so on and so forth. Even though we've influenced a lot of the ones we haven't brought money in, that a bunch of stuff to help them, their cause. But, I just think it's been a really good run. I think that, we're at a point now where, yes, the market has changed, and it's mainly changed at the higher level, where who is your real next investor? What does it look like? what is the scale you have to be to do, to look at certain things one way or the other. Oh, I've done 9 different types of recapitalizations. We continuously learn, because when you started Hilb, very much the hot thing back then was the decentralized model, right? And clearly I told Greg Williams he was the king of that, and that's what really got all the entrepreneurs, which is basically what insurance brokerage is, family businesses and entrepreneurs, okay? A little more focused on wanting to do deals, because, up until that point, they were selling to large corporations, great companies, Brown, Gallagher, Marsh Agency, the Hubs, the USIs, but, it was something different, and it was less change and alignment of equity. One of the things I think we started out with Choice was a little bit more of the decentralized model, okay? And now you're suggesting, and I see it, that you're evolving into what you need to be for this next investor, which is more of an organic grower / integrator. And you feel like that you're on the right track with that.
Well, I think a couple of things. First things first. Just before I forget, you mentioned something. I can't speak highly enough of the job Ricky Sparrow's done at Hilb. He has been, I got to meet him a couple of years ago. He's a gracious guy. He had an interesting experience coming in there, and he's just done a phenomenal job. And I just wanted to give him a shout out. So back to your question. One of the ways we've been able to pivot with our existing partners, because there are probably 15 of our partners that joined us in 22 and part of 23, where they were told, hey, nothing's going to change. You are not going to do this. We told them, hey, we'll do your HR and your accounting and things like that. But we had to stand up there at the beginning of 2024 and say, guys, all that stuff's off the table, because for us to build a valuable property, we've got to be able to deliver true organic. We got to deliver, data integration, and we have to be able to understand how do we cross-sell. So what things have we done at Choice to do that? I come back to what I said a few minutes ago. Northlane literally could not have been more supportive. When I sat down with them and said, we got to have a CTO. That's really important. So we ran a process. We brought a great guy in who had been with Progressive, and he's got a team. And when we acquire a business, his team comes in pretty quickly, and they sit down and they say, hey, look, if you're not on Epic, that's okay. We're going to put this software called Enable on top of your agency management system. And that allows us on the exec team to kind of pull data out of the agency management system, whatever it is, and focus on retention and growth and things like that. So that's been number one, getting that data integration. The second thing we did was the second half of last year, we ran a process for a chief growth officer. And gosh, we talked to 8 or 10 different folks across the country. And we settled on a fellow named John Pace, who came out of Aon. He had been a national growth leader for Aon on the benefits side. He'd been a global growth leader for Mercer on the benefits side. So really great pedigree. And John joined us in November of last year and has really been hitting the ground running. And that's been probably one of the biggest shifts out, is our partners, are now, we're like, hey, you got to do a pipeline and you got to do these things so we can focus on how can we, say to you, hey, by the way, you're working on this tow truck account, so-and-so in whatever, Jackson, Mississippi. Did you know we just bought a guy in Richmond and that's all he does? So there's a lot of that John and his team are doing that are driving organic growth, that are driving new business sales. And we really didn't do that. We sort of did it. We gave it lip service. And it's a lot of fun seeing our guys get excited, and girls get excited about, hey, we can grow together. So those are really the two main things that we did. And obviously kind of our next steps, we're it's funny, I'm meeting with my executive team. There's 4 of us on our exec team. And we're meeting Monday, Tuesday, Wednesday talking about 2026 and what do we see as the low-hanging fruit in 2026. And it's more ways to help our folks build programs, become more sophisticated on our EB platform. So those are really the things that we focus our attention on. And as you know, Al, 3 of the 4 members of my leadership team, we've all been producers. So, Troy Dillow, our COO, was our first merger partner back in 2021. John Pace has been a producer. I've been a producer. Sean McCardle, our CFO, is a CFO, and he's great at it. He always offers to produce. But that has a big part of our culture. The fact that our folks in the field know that we've all done this before. And so I can have a legitimate conversation with one of our folks that's, if we've got someone who's behind budget, we can call them and say, hey, what's going on? How can we help? And that's a big thing in our culture. That's really, really important. And we have authenticity with these folks because we've done it before.
No, I think it's really important because the cycle and now there's no specific time to make your next move, but the cycle has shown, right, at least the ones I've been on, and now things are changing a little bit, that as far as the next type of investor that you're going to attract, no matter what it may be, is going to look for that. Approaching 3/4 of 25 now. So, it's getting to be time where probably, as I always say on all of these things, the equity is only as good as the liquidity. It's going to be time where, where your shareholders, we're one of them as well, and obviously we're intricately involved in anything you do, are going to be looking for some type of liquidity event. It's getting to that 4-year period and whatnot. So that being said, doing these things are really important, for the next investor, no matter who it is, no matter what the options are. But I think it's smart that you guys are doing it because I think that's where the world is going. So you feel pretty confident that you're moving this business in the right direction. Do you think the next time? I mean, what do you think's next here for Choice? And how do you view Bob? Okay, just let me get this out. Okay, how do you view where Choice sits in the market? First of all, okay. And how do you view what's going on above the Choices? I wouldn't call them their peers because they're much larger right now. And some of the things you've seen that have happened with some of the larger private equity brokers who have been super successful.
So I think first things first, where we're going is really up to Northlane. I mean, there are partners, they have their limited partners that they want to make sure are taken care of. And, I tell our folks all the time, our job is to build a valuable enterprise that when we go to the market, a lot of people are interested in it. So I don't put a time frame on that. I do think that, we're coming up onto year 5, and I think hopefully there'll be some type of an event, but I don't manage to that. I don't lead to that. I focus my attention on building the best company possible. Now, I think it's really interesting when you look at some of the things that have happened in the last, call it 2 years now, with folks who are a little bit bigger than us. There have been a couple of really successful exits, and there have been a couple that have been a little bit challenging. And so here's what I've taken away from that. Number one, you got to have the right management team on the field, and you got to have at least an implicit suggestion of succession. So, I'm 62. I've got a lot of gas in the tank. Troy Dillow's 44. No one's making any promises, but it looks really good when he and I are sitting in a room and we've got this, great experience. We're moving, together as partners. I think that's really important. I think the second thing that's really important is the ability to demonstrate that you can do transactions. So you go back to when we were just getting started in 2022, right? So we were really scraping. We had to be scrappy in those days to get people to join us because there were a lot of other great options. You mentioned, Trucordia. We were always going up against PCF. We were always going up against a lot of these great firms. And so we had to really differentiate ourselves. So now as we're approaching $100 million, I kind of feel like it's kind of that tipping point where you're like, hey, we're legit. We're not going anywhere. So I think you've got to show good management team, proven track record of deals. And I think one of the things that's really important in that we do pretty well is your deals have got to come from folks like you, but they also have to come internally. So we highly incentivize our merger partners to bring us their friends. And we closed 4 deals on August 1st. 2 of them were internally sourced deals. So we love that. We love the fact that we're generating opportunities from within. And then the third thing I think, as I mentioned earlier, you got to have good data integrity. You got to be able to look into your data and be able to communicate the story that your data tells you. So for example, is one of your agencies struggling in retention? Well, what is that? Then that begs a question, and you call the agency partner and you find out one of his top CSRs has been off for 6 weeks with a health issue. Well, so then you try to figure out, how do you fix that? How do you let that person get well, but also bring in the people that they need to get their retention up? And then finally, the last piece of that puzzle, there's a couple other pieces, but growth is an enormous piece of that puzzle. And then finally, one thing we really haven't tapped in as much as we could are carrier relationships, wholesale relationships. How do we make those as profitable for both parties as we possibly can? So I see in 2026 us probably adding integration people, carrier relations people. I just see that the team is going to continue to build out, because the next partner, in my opinion, is going to, if you could put something in front of the next partner and say, we got the team on the field, we know what we're doing, all you got to do is fund us. I think that is so much more attractive than someone that says, oh, well, we got to do this and we got to do this, we got to do this. You and I both know that private equity folks want a return on their capital. That's what I tell my folks all the time. Our job is to take care of our clients, take care of our people, and ultimately, as shareholders, it's no different than if we're a public company. Our PE guys have shareholders that they have to create a return for. So that's what we're in business to do. We're in business to, number one, clients, then our team members, and then our investors. And if we do that well, the whole thing kind of takes care of itself. My dad used to always say, if you treat people the right way, it's all going to come back to you. And that's sort of the way I kind of viewed my career.
Well, I think, the one advantage that you have now is your size.
Yes.
Because it's clear to us, after we saw what has happened recently with like an Assured and a Risk Strategies, 2 excellent companies that,
Sure.
were poster child for how to do it. And I did a podcast with Mike Christian last week, and that'll probably be coming out here right before yours does. But Mike was very clear. He built the business. He never intended it to really be sold to a public company. Nothing against Brown, great company. I know them well, great people. But I think the thing that you can learn from is what happened with stuff like that, because you're now at a size where you can have another direct sponsor, okay, because of your size. And, it's really an EBITDA number, Bob. It may be a turning corner number for you in respect to size as far as how you do certain things within your company. But it's really an EBITDA number that is being looked at to where it kind of gets to a certain size and turns the tables on how you're looked at from a value perspective and all of that stuff. And we saw that firsthand, and if you get a chance to watch the podcast with Mike, a lot of that is going to be spoken to on my thoughts and feelings about.
I watched the wall so far, Al.
Well, listen, I appreciate that, but you're going to see that my thoughts and feelings on, why that went the direction it did, There's reasons for it.
Sure.
And it's not just clear cut and dry. And it's not what a lot of people think. You got to be really conscious about your size and scale. So you're in a great position, right? Teetering around 100 million, probably 40-ish, 45-ish of EBITDA. You're in a good spot to get another direct sponsor and try to do this again, provided that's a route. But a lot of people believe that it's not just going to be that just because you got a sponsor that everyone's going to keep getting sponsors and everyone is going to succeed at the same level as some of the others have. So, we do think that there will be some combinations coming up with some of these PE-backed brokers, and might not be a bad thing. Okay, because it might create the scale and the strength and some of the things that you're trying to do on your own that potentially might be easier to do together with someone a lot easier. But that being said, I think you're positioned well. I think, the future could be very bright for Choice. I think you are doing the right things and right moves. From what I see, you're putting the right people in place. Not that I have a lot to say, but obviously I put the whole thing together. So, I kind of feel a little bit like the architect. And I think a lot of your most successful deals have come from us. And, you referenced Troy several times. Troy was our client. So now he's elevated himself into, a top tier player in Choice, and he deserves it. Troy's a real good guy. He's young, he's aggressive, but bottom line, he's undertaking something much bigger than he was used to, and he's doing a good job, which I think is a big positive. But that's personality more than anything. You have the personality, the people skills you can develop into something great. But, Bob, any views on what you saw above you in the marketplace? Do you have any views of how you see why some of those firms? Because I'll believe, Mike Christian said it flat out, but haven't talked to the Assured folks, but I'm sure they never forecasted that they'd be doing a deal with Gallagher. I'm not sure that maybe by the time this podcast comes out, that deal will be consummated, but I'm not sure that's 100% consummated, but certainly Risk Strategies and Brown is. Any thoughts around, what you're thinking regarding that, seeing that, and any thoughts around, Bob, who do you think you out there right now is your biggest competition?
Yeah, that's a really good question. Yeah. So a couple comments. If I was talking to a seller in 2023, I would tell, before interest rates went up, before the economy got a little sputtery, I would tell them you could plan on 4 liquidity events. You could probably, I had this whole deal where I'm like, hey, look, you take $1 million of stock, becomes 3, it becomes 9, it becomes 27. Now I tell people those days are over. And the part of the problem is you get too big, and you hit the nail on the head. I mean, we're in a really interesting sweet spot at, call it circling 40 million of EBITDA right now, where there's a lot of PE firms that can acquire us and give Northlane its shareholders and our internal shareholders a great outcome, right? And then we can ride the ride with them, go from 40 to 150 or 200 of EBITDA. And then there's probably PE firms that'll buy you up there. But I think what we've seen happen with some of these big folks is what nobody expected, is they got too big. And you hit the nail on the head. Assured and Risk Strategies are both terrific companies. I met Mike years ago. You put Mike and I together years ago. He's a real gentleman, and he had a really interesting focus on specialty business. So from my perspective, I'm not involved in either of those deals, but what I can see is I think people got a little bit too big. So now you're starting to hear the rumblings with some of the other larger firms that are 200, 250 million of EBITDA. You got to hunker down and take the thing public. And I think you're going to see some of that. I think you're going to see some combinations. I think there's a bunch, I think at that level, you got to be $1 billion of revenue to be relevant to continue to climb up that scale. So I think if you've got I'm making this up, if you've got a couple $300 million brokers, there's going to be, it could look attractive to combine them. I don't know. I'm not that smart. I'm just an insurance sales guy. You asked a question, who do we see as our competitors? So I would tell you that our our mutual friend Curtis at Alchemy is a great competitor. He's a great guy. Really, there's a lot of times when I'm doing a deal and I find out that there's a West Coast firm in there. That's generally Curtis. Really have a lot of affection for him. He's a great guy. We are seeing more and more, certainly in the South. We see Oak Ridge, Robbie Smith's deal that's owned by Audax. We see them a lot. They've got an SEC footprint. And so we know when we're in Mississippi or Louisiana or Alabama, we know that we're up against Robbie and his team. And Robbie's, again, another great guy. Robbie's probably 150 of revenue. Curtis, I think, is 300. So, those are the guys that we see. Chad King occasionally. We occasionally go up against King. Those are really, every now and then, Patriot. Matt and his team. Matt's done an amazing job there. So one of the cool things about, for me, being back in the game after a couple of years out is the relationships you can build with your fellow CEOs and really getting to know your fellow CEOs in a way that, hey, there's enough opportunity out there for all of us, and you never know what might happen down the road. So I've made a pretty big emphasis in getting to know my fellow competitors. Those folks I just mentioned are all guys that I've either played golf with or, had a meal with or, just sat around and talked, over the last 4 or 5 years. And it's really been something that didn't happen as much when I was running Hilb. You were a little bit insular because you were out just trying to build as much revenue. Now it's a very different world. So in a very good way. So yeah, those are the folks that we compete against now. We tend to not compete against the bigger guys. Like, if you're an entrepreneur and you're looking at me as one of your options, and no disrespect to these other guys, you're probably not going to sell to NFP or to Hub. They're both amazing companies, but they're just different things, right? So most of the entrepreneurs that we look at partnering with are looking at other private equity backed brokers. So that's what we see as our looking. And then it gets into kind of interesting. It gets into geographies as well. So if we're looking to expand in whatever, wherever North Carolina, we really spend a lot of time now when we're talking to a seller explaining what else we have in their area. And that is something that gives sellers a lot of comfort when you can say to them, hey, I've got 3 offices within 50 miles of your town, and you guys can all help each other. That's pretty cool. That's a really good benefit of scale.
Yeah, I think there's validity to all of that. I think it's broken down a little bit different, though. I think that, some people are interested to be the first ones in a geographic area, too. It's not just, they have to have people around. It depends on the people and the personality. But no, your answer is good. I mean, I think that the real thing that has happened is, and I said this in the podcast with Mike, is you have to be a student of the industry. Before you would go out and try to do something with a significant firm and try to find the next investor, you better be pretty sure who that next investor should be, right? And that's kind of how we've done our deals. Is we pre-sell the deals before we get out there, because if you don't know who's hot, okay, and then you just go out and throw many balls in the air, I think that was the thing that people thought they could do. And when the interest rates are low, like they were, maybe it was more successful. But when the interest rate's high like this and people being much more selective, you got to really know your game. And unfortunately, I think they both went out to the market really not with a game plan like they should have had. And, I'm not blaming anybody. I'm not suggesting anything. They're fine companies. But I don't think if I know Mike, and I spoke about it, but I think, sure, if you asked anybody assured, they probably never said, 5 years ago they were selling to Gallagher and whatnot. Also, like I said, nothing against Gallagher. These are great companies. But it's an interesting dynamic. Keeps me on my toes. makes me continue to try to stay 5 steps ahead, is our mantra here, and why we've been super successful in what we do is, we try to stay ahead of everybody. And I think we've done a pretty good job with that. But Bob, listen, I think, like I said before, the thing that resonates most with me is our friendship, our relationship, the successes we had. I appreciate your kind words. You've been right there with me the whole time, and it's never easy. Okay. And it's still not easy, as we know, but anything that's good is not easy. And, it's been a super run that we've had, and we're still going here. And, the next stop on the train, we'll see what we're going to do here with Choice, and very exciting times. But I can't thank you enough. I think I covered everything I wanted today. If there's anything that you'd like to bring up that we missed, please fire away. But I can't thank you enough for joining me today. It's been terrific, and you did a terrific job.
Well, thank you, Al. And, look, I'll just reiterate, you have been one of my steadfast friends. I tell people a lot that, over the course of 15 years, the ability for you and I to, and a lot of times we talk for 2 minutes on business and then 25 minutes on something else, right. Our kids or our families,
sure,
or whatever. So I really value that. One other comment I will make about the last comment I'll make about the 2 bigger deals. Nobody ever wants to go out and run a process that doesn't execute, right? And I think that's one of the things that you do so well, is you look at whether it's Choice or whether it was Hilb back in 2015. And, we kind of glossed over that, Al. You executed an amazing deal for us at Hilb. We acquired 2 $8 million agencies and sold to Abry all on the same day. And
yes.
That was all because of you. I mean, you brought all that stuff together. And so I've learned so much. Yeah, it's just been a lot of fun. So thank you for having me. It's been a real pleasure. I've loved every second of it. And, we'll continue to persevere and keep winning our share of deals.
Thank you, buddy. I appreciate it.
All opinions expressed by the hosts and guests are their own and are not necessarily those of Sica Fletcher. This podcast is for informational purposes only and should not be relied upon as professional advice. Sica Fletcher employees and clients may have positions in the firms discussed in this podcast. Any information provided is subject to change and does not constitute an offer to purchase or sell any financial product. Sica Fletcher LLC does not underwrite securities, nor advise on, nor affect transactions in securities for the account of others. For more information about your unique situation, please contact Sica Fletcher or visit us at www.sicafletcher.com.